Looking to the Chinese markets and data, China Services PMI out on Tuesday saw a 3-month high, and out later in the week, China's inflation rate and balance of trade. So what could this data mean for China? Joining me to discuss this is economist with GFC Economics, Guillaume Derrien. Welcome to Dukascopy, Guillaume. Firstly, let's look back to Tuesday and the China Services PMI. China's services sector grew at its fastest pace in 3 months in December, as new orders remained strong. Yet this is contrasted with manufacturing slowing and Chinese factories struggling at the end of 2014. Is there enough data to indicate strength?
I would not be so worried about the slowdown and the fall in some of the PMI number in the recent months. I think the slowdown in economic growth in China is a logical consequence of the country turning more qualitative growth rather than quantitative growth. By that I mean turning more from housing and manufacturing to one more non-manufacturing and services. So, and the divergence between the two PMIs, as you mentioned, between the services PMI, which is quite very strong, and the manufacturing PMI, which is falling, kind of corroborate this picture. So I would see quite a lot of strength in terms of the PMI and going forward in terms of other indicator. For example, if you look at fixed asset investment, if you exclude fixed asset investment, manufacturing and housing, you will see that just investment in non-manufacturing is trending higher, which corroborates a bit the strength of the PMI. If you look as well at research and development spending as a share of GDP, it keeps on rising. And whereas the census survey out earlier in December last year, which showed that research and development spending as a share of GDP is at a new high of 1.5%. So I guess the divergence between the two PMI is just the logical consequence of a transition from manufacturing towards services in China.
China's inflation rate is out tomorrow. China's annual inflation rate slowed to 1.4% in November and touched the lowest level since January 2010. What are we likely to see in the data tomorrow?
Well, I think that would be surprising not to see inflation falling further, given the drop in commodity prices in December. Looking at more the core inflation, which outstrip energy and food, I will be more looking at this indicator as variable of where China is at the moment. One indicator, which is service inflation, which to my sense need to be looked carefully because it's been slowing as well in the recent months. That could be a side effect of a slowdown in the housing market feeding through to other sectors of the economy. But overall, I think the fall in inflation is good for China because that allows the Chinese central bank and the government to keep interest rates at low level, and which allow them to really foster and to underpin the transition, as I said, from manufacturing to non-manufacturing.
Also out later in the week is China's balance of trade. China's trade surplus widened to $54.5 billion in November last year, touching a new record high. Are we likely to see another high in this release?
It's hard to say already on a monthly basis what is the trend balance is going to do. I mean, there's two really counter factors happening in December. The fall in the yen is likely to put a lid on growth in export in China because Chinese export in China and Japan are the two biggest partners. So on the side, export might be a bit weaker than last month, but on the other side, it's likely that the fall in iron ore import will persist. So it's hard to say, but really looking a bit more a broader picture, I think what we're seeing is the strength of the trade balance really reflects the fact that a lot of Chinese manufacturing are climbing the value chain, and they're exporting a lot of higher value-added goods than they did in the past. And if you compare, because there's a lot of discussion around whether the export data in China are accurate, but if you really look at other national statistics, for example, you look at export data from China from a U.S. point of view or from Japan, you will see that they show a strength as well. So really, the fact that they're claiming the strength in export only on the basis of wrong data, it's clearly overstated. There's something much more optimistic, much more positive happening in China. And one more thing is, if, for example, you look at the trade balance in terms of electronic machinery equipment, which that's one of the components which have been rising very, very sharply, is at a new high now. So I have to see what's going to happen in December, but really the trend is very positive in terms of the trade balance for China.
Thanks, Guillaume. Great to speak with you. That's all from me for now, but do keep clicking back to Dukascopy TV for our regular updates and exclusive interviews. For now, though, it's goodbye.